Okay, I want to thank you guys for coming to class tonight. Today we're going to be covering day 12 of the 2-week syllabus. Today is October the 8th, and we're going to be going over day 12. Which is starting with video number 7. Okay, so now, first, before we get started, does anyone have any questions about anything that they watched last night for your homework? Did you write down any questions, any certain sections of video that stumbled you or you didn't understand?
No, I didn't.
Okay. No, a lot of it was pretty much like review and kind of just putting everything together. Did anyone have some aha moments last night watching last night's homework? Like things finally started to click. You picked up on something that you didn't quite get earlier in the week, or everything just started making sense. Did that happen for anyone last night?
Yeah, I will say I finished watching last night homework today, and it's all clicking. I see now how we take everything that you've given us, and it seemed like a whole bunch while we were doing it.
Right.
But now that he's showing us like how you do it for that trade, it's all clicking. It's making sense. And I see now how we use each one of the tools that you've given us and told us about, how we can use that to get in and out of the trade.
Yes. That's awesome. That's awesome. I mean, like, I can't even explain like what I felt like the moment that when I was first went through the back office, and I was like, oh my God, they just taught me how to jump in these markets and get some money. Like, it was, I mean, I was really excited because this is a life-changing, it's not even an opportunity, it's a skill set, something that no one can ever take away from you. And as long as you know how to do this, like what you're learning works on every pair. It even works on the indices. We just ask you to not, trade the indices right now because they are so volatile. They move so fast that if you do get in and it's going the wrong way, that you will have to, you could possibly, lose some money. So that's why we want you to take what we've given you and use that on the pairs and, become a profitable trader before you start messing with those indices. And then just take everything that you've learned and, start doing it on the indices. They just move faster.
I was going to ask about that because I see people that's like a part of the team that's already trading, and they talk about those a lot. I was just wondering, like, why don't I see them? But now I get it. I understand that they're not a pair. So that's why I don't see it when I'm in my demo account. I never see those indices.
What, you have Hugo's Way?
But I set up the Hugo's Way with you all, but I haven't used it like the demo account. I've been using the Meta4 demo account, like using the trading view to mark up my charts, and then I was just playing in the Meta4.
Okay. I got you.
Yeah, so I thought we were gonna do it together. I was waiting. So I didn't touch that one at all.
Okay. So I'll have to tell you how you can put those on there. It's not necessary right now. Did anybody else have any moments while you were going through these videos last night, good or bad? Did anybody feel like it just did not make any sense that's been coming to the classes for the last 2 weeks? So, that happened for anybody.
So Andrea, this is Jerry. So last night was really the first time I opened up to do a chart. I didn't have it all week to even do it. And even though I tried to remember everything, there was, some things that I didn't remember.
Uh-huh.
I got through the chart with the little bit of amount that I did remember, and I think I did okay. I didn't lose any money, but I didn't make a lot of money either. But
Okay.
it was pretty interesting, and sometimes it becomes overwhelming when you're looking at a chart and trying to do everything, put everything together that we did all week.
Mm-hmm.
But watching the videos today gave me a little bit of clarity on some things.
Mm-hmm.
Um, I guess it just is, the more you use it, the more you practice, the better you're going to get.
Yes, that's exactly what it is. And the more you use it, the more you practice it, the better you'll get, the easier it'll become to mark the charts up. Like you'll have a chart marked up in no time. You'll just be flying through marking up charts and it'll be ready. But you have to put the time in to be consistent with this. Consistency is key with this. Like I said, it's something new. It's almost like learning a foreign language. So persistence and consistency is what's going to help you become a better trader. And for anyone that feel like they did get everything that we went through for the last almost 2 weeks, take the videos from last night and watch them. Watch the videos, video 17, I'm sorry, video 7 and video number 8. 7 and 8, the entries and exits, because when he goes through that, he's telling you everything step by step what to do as far as when you get ready to get into the trade for the entry, and the same thing for the exit. Watch those videos a couple of times this weekend, over and over and over. And any section of that video, like you can't quite remember, or just didn't understand why he did it, you'll know what part he's talking about, whether it be trend lines and the channels, or support and resistance, market structure. If you don't quite understand something, go back to that section, watch those videos. But if you pretty much got everything, watch the entry and exit videos a couple of times. You want to still go back and watch all of this stuff again. I'm telling you, like, one time of going through this is not, and you guys got it way better than, this is the first, I think not too long ago is when they started having someone on here actually doing this 2-week syllabus. When I first got started, we got given a 2-week syllabus and that was it. You were on your own. So you guys got it made. Like,
yes.
when I went through this the first time, the clarity that you guys got from going through this 2-week course with me, I did not have. Half of this stuff did not make no sense to me, even when I went through it the first time.
Yeah, no, I believe it, because I was going through the Trade Academy before we started this, and I was lost.
Really?
I was lost. I didn't understand anything, and it absolutely was like a foreign language. It looked foreign and it sounded foreign. So now to be able to look at these charts and understand what price is doing, to know what people are talking about when they're using the Forex terminology, like I feel like I maybe got 2 years of college in 2 weeks.
Yes. It is. I'm telling you, like, it's an amazing feeling when you even feel like you halfway know what you're doing.
Yeah, no, honestly, I didn't think I could learn it. So this has absolutely helped my confidence a lot. I thank you a lot. And we can unmute and ask questions. Like, it's priceless.
So true. So true. Andrea, thank you. I'm sorry I chimed in a couple minutes late, but it was, yeah, I'm with her. I joined originally in May, and yeah, we were just, it's like, just go through the back office, go through the 2-week syllabus, and go through the Candlestick Trading Bible, and it's just like, it was like a whole data dump and video dump, just, and like you said, it's a foreign language.
Mm-hmm.
I am determined to get this. So I appreciate your patience. So yeah, this is good, having the interactive, and it helps me for accountability as well.
Mm-hmm.
Instead of just saying, okay, I'm gonna do it, but you know, I want to be at class every night. So I marked up my chart actually by myself last night. Was really the first time, and I'll have to tell you. I've been looking at it, and you know, Aaron's been saying, you got to push the buttons, just push the buttons, Mom, push the buttons. And I'm like, ugh. So this has been, it's been very helpful. So it took me a while last night, but it was okay. It felt good, still trying to go through it and understand it. And I haven't opted in for like the paid version of TradingView. So they limit you to three tools to use, which was fine. That's all I used was the three.
Mm-hmm.
And it was okay. I was a little off on where my starting point should have been, but
Uh-huh.
I still felt good. I didn't make a lot of money, but I was in the green, you know, just like a few cents. And I felt really good about that.
Okay.
So it was progress last night. At least I was able to put a trade in that didn't say that's not a real trade, you know?
Right, right. And to put a trade in, your first trade, and be in profit. I don't care if it was 5 cents, you know, 2, 3, you were in profit. You
Yeah, so
know,
the chart did.
remember, each trade that you place, you got to pay your dues first before you can even become in profit.
Yes,
So sounds like,
absolutely.
yes, that's great. I'm very happy for you
Mm.
all. Everyone that's been coming to this class. I really feel like just having this class every day does give everybody some accountability to come, and it pushes you to be done with this in 2 weeks. Because I know when I was going through it, it took me well over 2 weeks to get through the 2-week syllabus. I was doing it alone. So that's great. I'm very excited for you all. And I'm going to, before we get started, let's just take a few minutes and do this. I was going to just like randomly call on people to show their charts, but I got some messages today and not everyone is ready for that. So I'm going to ask if anyone would like to show their chart, share your chart with us, and just explain your markup.
I'll volunteer.
All right, let's see. Is that Jerry?
Yeah.
Okay, Jerry, what I'm going to do, I'm going to make you the co-host so you can share your screen. I'm going to stop my share. All right, Jerry, there you go. Just share your screen.
I got to get into share it, right?
Uh-huh.
Share screen.
Yes.
Multiple participants. Is that what I have to hit?
Yes.
Okay. Can you see my screen?
No, I
Let me
can't.
see you.
Oh, wait, let me advance sharing. It says,
It should be a little green box at the bottom when you hit share screen, and then, are you on a computer?
oh, here it goes. It came up. It came up. Hold on.
Okay. All right.
Got it?
Uh-huh.
Let me get rid of this. So last night I looked at a couple of things, a couple of charts.
Mm-hmm.
And basically, and like I said, I didn't use a lot of the tools because I was very unsure of myself.
Mm-hmm.
The first two that I looked at, the things were really in consolidation. They were going straight across, and to me, there was really, when I looked at it, there was no way to get in and make any kind of trade because it was such in consolidation. So I got to this one, which is the and what is it, Netherlands, Japan? And this is where the chart started last night, right here, long red one.
Okay.
The first thing I did was I looked, so from here back, I looked at it and I found, my resistance and my support lines here, which I'm hoping I did right. You're going to
Okay.
tell me whether I did or not. And then looking at it, it was going into a bearish trade. So I drew the support and resistance on the trend line. And I couldn't find the cross, the one that has the line.
The channel.
The channel. I couldn't find that. So I just left it like that.
Mm-hmm.
What happened was down here, as I looked at it, a doji candlestick came up,
Mm-hmm.
red, and then it started to go green, and that's when I made my decisions to do a buy.
Okay.
And this is the area that I bought in. This was my take profit up here somewhere. I think it was.
Okay.
So that's where it stopped at. But the net that I made was $3 because it was
Mm-hmm.
0.01.
Okay.
So again, not being sure of myself, I'm sure I could have done a little bit more marking up of the charts.
Okay. Well, Jerry, I think you did an excellent job. Okay. I'm going to let me just go over a couple of things here on this chart. Okay, so he traded the New Zealand dollar against the Japanese yen, what we call NJ. Okay, so your resistance, great. You said that price was over here at the beginning of this channel. Was it at the beginning of this channel, or where was it at when you first started looking at the
It
chart?
was right here, the second big long red one.
Okay, so that's
When
where
I opened it up, that's where it was.
Okay, so when he opened it up, you guys, right here where this big red candle is, show him, Jerry. That's where price was at. So everything to the right hadn't happened yet. He couldn't see. So he started marking his charts up. Jerry, did you do this on the 1 hour and then drop down to the 15?
I did. I started on the 1 hour.
Okay. So
Um,
on the 1 hour, he trapped price. He drew his support and his resistance line.
Correct. That's what I did.
Now with this,
And then also, and once I did all this, I did the pivot, which I don't know how to make this bigger. I think it's
go to your price and open it up. Make it, stretch it out. Stretch price right there on the side. Right here where price is, make, yeah. That's how you make it bigger. And then you can, should be some plus signs at the bottom to actually make it zoom in.
So when I looked at this, I wasn't that far off the resistance line here, and not off the first support line here.
Right. So everything you did was correct. As far as your marking up, you did a great job with the support because you started where price was close to. You did make a resistance line here. I would have made some resistance S&R a little closer than that. I probably would have had another one.
Like up here?
Actually, let's see. As you go back down to your support, Jerry, and you come over here to where price was open at. Bring your cursor over here to where the open. Okay, so now they found your support level, right? So
right.
As you go up, y'all want your eyes to look to the left. You're looking for areas where price touched more than one time. Come up, go up, right? Come down. Here's a level here. Come
Right
down
there,
a little bit.
3 times.
Come down a little bit more. That's the area right up underneath that candle. At the top of that candle, you look to the left, you see how we got resistance under it, and I'm sorry, resistance under it and support on top of it. See that? Remember how we said if we were to look at this sideways and we were going to roll a bowling pin down? I know you can't see my cursor. I'm moving my cursor like you can see it. But it would go straight down here. You see how we got can you see how that is support on the top?
You're saying these over here came, touched support and resistance, and that where.
Yes, if you hold the line there in, because I want to make sure you can see it. Bring the line back, oh, you could have left that support line. But I want to show you, I'm gonna have you move this up and look to the left and show you different areas. Put your cursor back here where the price entry open was at.
Right here.
Yes. Now, as you move up slowly, look to the left.
Right.
Look for areas where price is going to be above and below that line. You just passed one. That's the area. Now keep going up. Here's another area. You see here? Look here. You see how you got price under this line?
Right here.
And above the line. Yes, keep looking to the far left. Look over here to the left. Keep looking far left. You see that? You see how you got those peaks under the bottom?
Yeah.
And then you got the peaks over the top?
Yeah.
I would have drew a resistance line there.
Okay.
Okay, and the one you had up here at the top, that was a perfect one because that's where your R1 is at too. But you can see that that's a resistance line. You see how many times price went up there and hit it and rejected it and it came back down?
Yeah, what I looked at was the highest,
the higher point.
And how many times it was going across.
Right.
To determine my resistance line.
Right. And so, let's see, another area could have been, and remember, these are just going to be like, so you can know like where price is going to stutter at. It's already been there before. It's going to go there again. It's going to be the point where it's going to have to determine, is it going to break through or not? That's the purpose of those lines. But this right here was an excellent trade. I love how you decided to get in at the bottom on support, and it was an excellent trade because the risk to reward was great because you caught it at the bottom. Your stop loss didn't have to be a lot.
Right.
Because you caught the whole.
And I was being conservative on everything, so.
Yes, and it hit TP. You should be very proud of yourself, Jerry. You
Yeah,
did
it
an
went.
excellent
I
job.
think it went up. I think it went up to here.
Yeah, it did. You can see right here, it went up to the R1.
Yeah.
Yeah, it came up. Now, you could have technically, you see how it busted straight through this S1 here, down below your R1.
Yeah, right here.
And then, no, the second one up.
This one here?
So with it coming, yes, with it coming straight through here, you could have taken it all the way to the R1 because that's
right.
exactly it. It made it almost there. So a lot of times, like if I'm trading pivot to pivot, you'll see this a lot, where it'll make it. It will. You see how this wick end up hitting it. Sometimes I'll place my TP like under it a little bit because sometimes it'll go, like almost there.
Okay.
Before to start coming back down. But it hit TP. I'm very proud of you. That's so exciting. That's
Thank
great.
you.
That's your
Good
first
job,
time doing
Jerry.
that?
Yeah, Jerry. Yeah.
Not bad for
Yes, great job.
being cautious, huh?
Yeah, that was very, very good, Jerry. That's awesome. I'm very proud of you.
Thank you.
Anybody else like to share theirs?
I wish I would have did another one. I'm sorry. I had the one from the other day, but it doesn't have my pivots on there. And then I did it on my phone. I was just trying to look at it. It looks weird on the phone. And I'm on the Zoom on the phone. But I did do, because, you know, day before yesterday, we were studying, and I put the lines from the monthly chart, and then I changed the colors. So yeah, I hate that I'm on my phone and I can't at least show you that one, but I didn't get to do it again and use the pivots just yet.
Okay,
And
well,
I'm
you get your one
sad because I
together
wanted you to critique it.
get
Okay.
your one for tomorrow, and we'll look at
Okay.
it tomorrow. Is there anyone else that would like to share theirs with us before we go ahead and officially get started? I am so proud of you. Like you guys got me feeling some type of way. Like I have assisted you all in the basics of trading.
You have.
Yes, you have.
And you've done a fine job, trust me.
Yes.
That's
Wow,
true.
I mean, I
Keep
am
showing
feeling
up.
some
Great
type of
job.
way right now.
Oh,
You should, because you have me feeling like not only am I going to trade, but I'm going to recruit too, because now I know I can learn it. I can absolutely tell somebody else and feel confident in the fact that we can learn it, even if we're a little bit older.
Yes.
So
And then the
thank
great thing
you.
about it is that you can tell them, hey, they got this 2-week course. I'm talking about I learned this stuff in 2 weeks. You know, it's a lot more to it, but they'll teach you how to at least place some profitable trades in 2 weeks.
Yeah.
That's awesome. Anybody else want to share?
Yeah, I can share mine.
Okay, who is that?
This is Roderick.
Roderick. Let me find you, Roderick.
I
Okay,
already hit the unshare button, so.
Okay. All right, Roderick, I just made you co-host. Go ahead and share your screen.
I can search the web for that. Just
wow. Okay.
Okay, can you see my screen?
Yes.
All right, let me scroll out. So, where was this? This was, let's see.
Before you get started, Roderick, let me ask one question. How many people checked the news before they started marking their charts up last night and placing these trades?
I did.
I did too.
In fact, I had picked something else, and then I saw the news, and I'm like, they told me not to trade this news. So
right.
Yeah, Great Britain had a red folder.
And sometimes when you check the news and you see that it's going to be red folders for a specific pair, even if you don't plan on trading during that time, I would pull up charts for that particular pair during the news and watch it. Watch it so you can see where red folder news does. It'll keep you out of the market, I promise you, if you watch it first. Okay, I'm sorry, Jerry, go ahead. The floor is yours.
Okay, this is Roderick.
I'm sorry.
Oh, no worries. So I went to the 1 hour, and these are my resistance lines, and my support lines are in this color. And this is what I saw. And then I dropped down to, I think I put this vertical line here because I believe that's when we started, when I started doing this chart.
Okay.
To help you.
Okay.
Can't really remember. So we'll go down to the 15-minute. And then I saw this trend line, and I was just playing. It didn't really help me because it was already past this point. So I can tell right now that it was past here at least, because I used this tip and this tip for my price channel, and I dragged it down here. So that's pretty much where it was. And then I set some alerts because I was working today.
Mm-hmm.
And I missed this area right here because I really wanted to take this sell entry right, or this buy entry right here,
Mm-hmm.
but I missed it. But then I kept watching it and I saw this
Mm-hmm.
right here. And so I went ahead and put that up. And then I went to look for my pivots, which are right here, to try and see where that R2 pivot was.
Mm-hmm.
But it was way up here. And I remember the videos was talking about, watch out for don't ignore your own
Mm-hmm.
support and resistance lines. And that was like such a long way to go. So
Right.
I just wanted to play it safe. And
So you took it to your resistance
so I
level.
took it to my resistance
Mm-hmm.
and I put my stop loss. I was just going to put my stop loss right about here, but then I saw this little thing.
Mm-hmm.
And in the past, I've always been stop lossed out. So I just decided to put it at here or right underneath here. So that's what I did.
Mm-hmm.
And as you can see, I was so
Right.
happy because it came down here. I could have been stop lost out.
Mm-hmm. And it looks to me like you have it even with the wick of that red candle. In the future, I would come down past it just a little.
Right about here, you're talking about
Um,
the stop loss.
yeah, I would come down. It looks like, yeah, it looks like you came right to the wick.
Yeah.
I would have come down just a little bit more because sometimes, remember, price can go where it came from.
Yeah. Okay.
So, but it was really close. But your trade hit TP.
It did, but let me show you something too. I had a uh, an alert here,
Uh-huh.
or some. I think actually. Oh yeah, I had an alert right here.
Uh-huh.
I had an alert right here, where basically where my TP was supposed to be, and right about here, it went down without hitting my TP, and I was like, man, I was like,
Okay, so
okay, so
it didn't quite hit what
it
you
didn't,
had set.
yeah, it didn't quite hit, and at this point, um, it was. Let me show you a trick that Derek Conway taught me. Um, this is called a replay.
Uh-huh.
So this is what I was looking at,
Right?
and then it did something like this, and I paused it, and I was mad. I thought it was going to go all the way down
Mm-hmm.
because this was a major support.
Right?
But then I got a phone call, and I came back from the phone call, and it was just acting like this, and it kind of went up, and it hit my TP, and I was so happy.
Okay.
So that's my chart. Is there any improvements that I could have made? Let me break out of this.
You did a great job on your supportive resistance zones. As you can see, if you look at it, they're so clear. You can see where price went, all the retests, the breaks. Can everybody see that?
Yes.
Beautiful channel. Your trade hit TP.
Yeah.
The entry, that was a perfect entry. I would have just bought the stop loss down just a little. Well, that's the most recent low, but because of that wick over there, and it's so close, that I would have just bought it down a little bit more. Um, just because I would hate for you to catch a trade like that. It's such a, catch the move and then end up getting wicked out.
So you would have brought it down to maybe
Just a little, I
here?
would just a little bit below that wick. It seems like you got it lined up exactly with it. It would have been a little bit lower. Because
Okay.
sometimes it'll come like to that same exact area.
Okay. All right. Now this I did it a couple other
Um,
times, but I'm not going to show you those because I lost.
did you analyze why you lost? Do you
Let me
understand
see.
why?
Let me see. Is this green one over here? This one looks ugly. Do I know it looks messy, so I
It's
apologize.
okay. Don't take your stuff off because you know what that is, and just kind of walk us through it.
Okay. So I can't even see this. Let me try and back up a little bit. So first of all, we'll start from the top. I went to the 1 hour
Uh-huh.
and I put in some of these major support and resistance
Mm-hmm.
lines that I saw. And
You watch Derek Conway a lot. I see your zones. Beautiful.
yeah,
Yes.
that's how I first started.
Uh-huh.
And then I started getting into the back office. And so then I know it's hard to see, but I went to the 15-minute and I put in some lines here, trend
Mm-hmm.
lines.
Okay.
And
I
this is the
see it.
very first one
Mm-hmm.
that I took.
Okay. Why did you take this in the middle of this move?
Because I was being silly. I it had it was I was I thought I was gonna go. I'm embarrassed. I thought I was gonna
It,
go up and get these pips, but it
mm-hmm.
didn't. It went down.
Not to embarrass you. Don't be embarrassed, okay? Um, you want to hear this stuff now,
Mm-hmm.
you know, and you always want to catch the entire move like you did on the first time.
Mm-hmm.
Now let's go back and look at where. Okay, so after watching the videos last night, you guys know that taking the trade in between the zones or in between the pivots is a secondary trade,
Yes.
and it's
Yes.
extra risk. That's why we preach try to catch the whole move. You want to catch the buys from the support level or the S1 and the sales from resistance, R1s, R2s. Okay. So, because what can happen is if you get in the middle of that trade, let's look at this first trade that we
Roger.
got. Rodney. Rodney, I don't know why I want to keep calling you Jerry. Let me write your
You
name.
can call me Rod.
Okay, Rodney.
Make it simple.
So you see how he got in the middle of the trade? So he got in the middle of the trade, and you see how quick it shot down for a stop loss? It didn't quite hit his stop loss, but the risk to reward wasn't great because if he had a gotten in for a sale at the top, he could have wrote it all the way down to the support level. Do everybody see that?
Yes.
It ended up playing out. You actually won the trade. Let me see. Did it? Yeah, it actually ended up panning out for him. But look at the drawdown that he was in. How many pips drawdown is that, Rodney? You know how to do the pip
You mean
counter?
from here to here?
From entry to, yep, from entry down to this red wick, that doji looking candle. Come down a
16
little bit
pips.
more.
Oh,
About
even
16.
more right
Well,
here.
no, right to the very end of, pull it over to the side. Let me show you how to be accurate on your pip count. Go to the side of the candle you're trying to measure so you can see that candle. You see how it's transparent, how you can see past it? No, come to the right.
let me start over because I don't understand which candle you're talking about. So let me zoom in a little
To the
bit.
very this
So you're
red
talking about this
candle.
candle right here?
Yes, the one with the whichever one has the longest wick.
Okay.
Yes, you want the very tip of that wick from entry to there.
Tip of this wick right here, or tip
Yes,
of
the
okay,
the
here we
tip
go.
of, from the bottom. But listen, okay,
Am I
that's
right?
good. Yeah, that's right. But when I do mine, you guys, I put my cursor off to the side so I can see where the tip is and make sure that I'm getting it accurate. So I can see the tip. I'm just off to the side of it because you see you can see through it.
Mm-hmm.
So how that's like what 20 pip drawdown almost.
Yeah, 19, 20.
So that's why you guys don't want to jump in those secondary trades in the middle like that. But that played out in your favor. Um, good job on marking up your zones and your channel.
Thank you. I was working and I had this. I was so mad too because I wanted to get in at the bottom
Uh-huh.
and get a buy trade up.
Okay.
But I don't know. I came back to the chart and I'm like, how come I didn't get my alert? And
It
because I
wicked
knew
it,
that,
it missed it by hair, didn't it?
yeah.
Yeah,
So,
when I come to an area like where I'm gonna set an alert at, I always go up a little bit or go down a little bit because I've had it where it'll come like right to that area like a hair from hitting my alarm and go exactly the way I wanted it to go, but my alarm never went off.
yeah, I would have normally put it right here, and you can see
Mm-hmm.
if I did enter it correctly, it would have triggered it, but I didn't enter it at all. So I just wrote myself a reminder
Oh, okay.
that
Great job. Very
Roderick, you
proud
got
of
to
you, Rodney.
remember to do this. Okay, thank you. I
You did a
appreciate it.
really, really good job.
Yes, that's
You did. Good
amazing.
job. All right, you
Yeah,
guys.
that
That's
was
very
good.
nice.
Good job,
Tomorrow,
Roderick.
Thank you.
tomorrow we'll go over anyone else that wants to like mark up and go over that tomorrow. We can do that, okay?
I take mine back. Their charts look so nice. I'm like, maybe we don't have to look at mine tomorrow. No, I'm just
I
kidding.
know, me too, Keisha. I'm like,
Okay.
I got some more work to do.
Some more work to do. I had a lot of lines, but
I'm telling you, practice, 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 okay? So
yes, ma'am.
we're not gonna be on here long from now, okay? We really don't have a lot to cover. Let's see. On video number 7, this is where he talked about the primary trade and the secondary trades. Secondary trades is trades that are taken in between the pivot levels, which means that they are extra risk and probably have a lower probability of playing out the way that you want it to. So I do got 2 sections of this video that I would like for us to watch.
If you're showing your screen, we can't see it.
Can you guys hear Andrea?
No,
Huh?
No.
I can't hear her.
No.
Okay, we couldn't hear you, Andrea, just now.
Can you
And
you
we
can't hear the computer?
No,
No,
and we
no, and we
can't see
can't
your
see.
screen.
can't see the screen either.
Oh, hold on. Um,
Uh, okay,
Roger, did you unshare your screen? Oh,
I did. Great minds think alike.
Okay, it's
Okay, you
good.
can taken out here aggressive entry. So aggressive entry, mean red taken out here
okay. Can you guys
at
hear
this
now?
mean red candle that
Yes.
comes through. So this is
Yeah.
going
Yes.
to be a
All right.
loss. Okay, so we're going to lose 15 pips here. Now,
Okay, everybody pay
price
attention
comes
to this
through,
right here.
mean red candle. This bearish engulfing candle that blows right through the pivot is your aggressive entry. So let's label this candlestick right here is your aggressive entry. Okay, you can sell that. The conservative entry is this green one here. Conservative entry. Now, the reason that this green one is the conservative one is because price holds and rejects from pivot again. Okay, so this is the confirmed entry across the pivot. You can sell this engulfing red one across the pivot as well, but just know your conservative entry is when price holds on the other side of that pivot. Okay, so we're going to get an entry here. Stop loss is going to go a little bit past pivot. And we have this trend line coming up here. We have to be aware that this is a support. So when price just barely doesn't make it to pivot, I mean, we're 5 pips away here, and rejects back up, holding within this trend line, we're going to close. That is a manual close.
Does everyone understand why the red candle was considered an aggressive entry and the green candle was considered a conservative entry? You guys unmute yourselves.
No.
No, not really.
No, if you could break that down for me, for us.
Okay.
I see
So,
that. That's an engulfing candle, that red one.
yes, but it's after the green one. So this is why it's an aggressive entry. So remember, you want to take your sales and buys from the pivot level, depending on what side of the pivot level it's on, right? So this right here would have been an aggressive entry on this candle because we wasn't for sure yet if price was gonna hold below pivot. Just because it came through, price could have came here and you see how it came over the pivot, it could have kept going. So that's why it's considered an aggressive entry. The green candle entry is a more conservative entry because price broke the pivot area and price held.
Okay.
It came down, it rejected it, and it held. This is showing rejection. And it held and this price started to go down.
so would you take a there or a buy? You would take a sell.
Yes, a sell.
Right, okay.
And another reason why you would know this is a sell because it's under the pivot level, right? But
Right.
also this is exhaustion. So even though it's a green bearish candle, what kind of candle is this? We just went over this. What's the name of that candle?
An exhaustion candle.
It's an exhaustion candle, but price went up. You see where price tried to go, it went up, but it didn't hold. It didn't sustain. It came back down. So it rejected the pivot level. Does that make sense?
Yeah, so you would have had to get out manually at the bottom.
Yes, and that's
In
the
as a
whole
buy.
reason. Yes, the whole reason why I wanted us to watch this section of this video was to make sure that you guys understood what an aggressive entry was versus a conservative
So we're
entry.
gonna win that one.
And then I wanted you to understand why it's important to use those trend lines and the price channels so that you know when to enter and exit these trades. Now, let's just say that someone's seen this and they seen the break. This considered a retest, and they said, "Oh, I'm selling this. I'm gonna sell it all the way down to S1," right? So they get in a trade. They set the stop loss above the most recent high, which would be, we got a wick here. So I would have came up a little bit more up here. And they set the TP at the S1, right? They go on about their business, forget that they got the trade running. Now, the trade start running there in profit, 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 profit. You got that deal, take profit set down here. Guess what? You never reach take profit. So your trade's still running. So now it turns around, goes the other way. It's going negative. As soon as you hit where you entered, you're going in deep negative. Right now, you're just eating up the profit that you gained. You eating your profit up as you're going back up. As soon as you hit the entry point, soon as you get on the other side of this line where you entered at, you're going negative now. You're going negative, negative, negative until they hit your stop loss. So if you had drew the trend line, you would have, because the trend lines are what? Support and resistance, right? So anytime you enter the trade and you got a trend line and it hits your trend line, that's taking over the S1 or R1 or whatever it is. That's going to be your TP. Does that make sense? And you would have knew that this was your TP before you even got in this trade. And this is how. Because this is a touch, right? So if you had started your trend line, it would have been going this way. Because look here. So when you set this trade up and you see this trend line coming across here before it hit to the S1, that's going to be TP. You're going to take your little cursor and line it up with this trend line, and whatever this number is over here, that's going to be your TP.
So Angie, I'm curious, why didn't the trend line why wasn't it drawn to the tip of those candles instead of the bottom?
Because this was the entry here. Can you see my cursor? This was the entry here, whether you took the aggressive one or this one. So this hadn't happened yet when this trend line was drawn.
Oh, I see. Okay.
So that's how you would have knew when you entered the trade. You see trend line below where you're entering. That's, even if you got a pivot under it, that's going to be TP. That's going to be the safe TP. That makes sense.
Yeah. So basically, the two touches that he's grabbing is from there and before.
Yes, he started drawing this trend. If I was to reverse it, you would have seen where he drew this trend line before we got to here.
Okay.
It was already drawn. It's based off of this point and a point back here somewhere.
So now let's just fast forward. So if we fast forward, would you have readjusted the trend line and moved it down?
Okay, so for this trade that I entered, when it hit the trend line, I would have got out. Okay, because when it this would have been my TP. when it hit this trend line, I would have been out of this trade, because what happened when it hit the trend line? It price started going back up,
Going back up. Okay.
because this is considered support. So I would have been out of my sell trade. You could buy back up, but I don't counter trend trade, and I don't encourage you guys to counter trend trade. They don't either in these videos. However, they do teach you how to sell from resistance and buy from support. And with this being considered support, look what happened. What happened? It hit it, and what? Price went back up. It went all the way up to the support or resistance line that he drew, and to the R1.
So Andrea, this is what's mind-boggling to me, because I know that, you know, we set our take profits, whether it be 1, 2, whatever, and so it would have been at the S1, perhaps, if, you know, setting it. So
well, okay, so if
if
someone took this trade and didn't draw this trend line here, if you wasn't sitting there in front of the charts looking at it and seeing this happening, you could have potentially lost this trade. It would have been considered a loss once it passed your entry point, which you would have got in somewhere around here, okay, or here. Once it passed your entry point, that's when it would have been considered a losing trade. Now, because if you set your TP at S1, take profit, that means when it hits this level, take me out the trade. If it never hits this level, it's not taking you out of anything. If price decides to go back up, it's going up and it's taking you and your account with it.
I know, that's the scary part.
So that's why you want to, the whole thing is to trap price. Use those channels, use those trend lines, because what did he do right here? He trapped it. He trapped it. He said, oh, I'm going to draw this line because this is going in an uptrend. So let me draw this. He drew, it had to been going in an uptrend. How we know? Even though we can't see everything over here. Because the trend lines, price is over. Exactly, because of where it's at, right?
Yeah.
And he drew it like that because he wanted to know when price broke. So he's using everything that he's taught us to take this trade. So even though it's an uptrend, we got this pivot on here because we learned how to do this pivot strategy, right? So even though it's an uptrend, when it hit this pivot level and price came through it, retested it, and price held, took the sale. So just remember to use your trend lines and your channels on the 15. Because remember, you're taking your entries from the 15, right? So it's not going to be hard to remember to do this because it's actually part of the basic strategy. It's number 2. Go to the 15 and mark your trend lines and your channels, right?
Yes. Yeah. I did notice that was on the 15, so okay.
Yes.
That's my thing. I just got to get quicker at stuff, but I guess that's why you start at least an hour out, starting to mark your charts up, you know, before
Yeah, I
you
train
even
in
want
New
to
York
start
in the
trading.
mornings. They open up at 8 and I'm on the charts about 7 o'clock in the morning. Because once the market's open, price start moving. It's not waiting on you to sit there and mark up a chart. It's moving.
Right, it's too late at that point.
Mm-hmm. Okay, so do everybody understand that? Why that's an aggressive entry, why it's a conservative entry, the importance of a trend line. Trend line is considered support and resistance. Use it just like you would a pivot level to enter and exit trades.
I had a question a long time ago, and Stanley, I believe it was, also asked this question about a secondary question about that trend line.
Mm-hmm.
Um, Now, after you exit the trade
Mm-hmm.
and you wanted to prepare for the future,
Mm-hmm.
would you then adjust that purple trend line to include those 2 wicks in case you needed the trend line in the future? Would you pull that down?
Um,
Because
actually,
those seem to be a little bit lower than the.
yes. So like when after this happens, yeah.
Mhm.
But then when you see how price jumped up here, now you're going to need to you can adjust it again. This is, remember, we had a session where we did like inner and outer trend lines, how you can have like 2 trend lines. Anybody remember that?
Yes.
That's where this will come into play. That makes sense. So you would adjust this to get to include the outermost boundary, as long as you got, because when you move this, we're not going to have to touch here, right? So as long as we got the touch back there, it will be considered a valid trend line because we need 2 of them. But then you could also draw another trend line from here this way. You see where you would get the touches at? It'll be a steep trend line, but it's a trend line. Everybody see that?
Yes.
Yes.
That's what they call what they call it? Fanning trend lines, where you might have, I've seen some before where they have like this major trend line out here. It might be a trend line going up here. It might be another one going this way. You want to trap price. So sometimes you'll have more than one trend line coming off a trend line. It'll be like a trend line within a trend line. And it's in the section about the trend lines. I think we went, I'm sure we did. I'm sure we went over that. I remember having that discussion with you guys.
Talking
Does
about
that make sense to everyone? So yes, you could adjust it, but when you adjust it and pull it out here, you see this big gap, how price shot up. So now what you gonna do about that? That's when you'll know to go draw another trend line. And you don't have to draw a trend line from way back here. You can draw a trend line from here, where this up move started. So you will grab the bot, you will start at the bottom of this wick, and you will draw this trend line up this way. Make sure you got at least 2 touches. I can't draw on the screen, but if I was, it would be going this way. And it would be a steep trend line. And it would touch here. And it would touch there. That's 3 touches right there. And look at price. It's still going up. It's staying above my trend line, right?
Mm-hmm.
Everybody see that?
Yes.
Anybody got any questions about that?
No, that was good. Thank you.
Okay, let's see. Okay, exits. Let's see. It was one more thing. Didn't want to keep y'all too long tonight.
Day, price is just kind of moving back and forth. Maybe you took a few small losses through there. We're going to adjust our trend line to this wick now. And we're going to get ready for the next day. So as you can see, this day went pretty good. We had a loss of 20, gain 34, gain 60, loss of 24, gain of 85, so I mean, it was a very profitable day. You had 2 losers, 3 winners. Very profitable day. And just remember, guys, we don't want to trade the latter half of these pivots just because it's not going to be long before you get a pivotal update. Now, before we move on to this next day, we are going to adjust this trend line a little bit. And here's what I'm looking at here. If you look, you can see that these moves from here, this move looks very closely related to this move, right? You can kind of see how price is moving with the same characteristics right through here. So what I want to do is I want to take out this area here that doesn't flow well. It doesn't have the same characteristics. There's a lot of slow movement, sideways movement within here. So we're going to take this out and we're going to get these moves tied together here. So this massive push here started right here. This massive push here started right here. Those two moves seem to be related. They have the same characteristics. They could be cousins. Whereas these moves here, this is like their third cousin. Okay? So we want to line up the moves that look similar, look like they are actually related to what's going on.
Now, I wanted to show you that section just to show you how he did end up adjusting the trend line after the move had happened. This is the same move we was looking at on the other chart, on the other screen. Everybody see that? You see how when he adjusted it, you see at first, when he first drew it, he started back down here. But then after these moves had happened, when he got ready to adjust it, it didn't even make sense to have it down here because price wasn't really doing anything. This right here is, you know, kind of consolidating, playing around this area, making up his mind if it want to go up or down. So he just got it from the bottom. When you're doing these trend lines, you want to try to catch the move at the bottom or catch it from the top. Okay, he had drew this trend line here, I think at the beginning of the video, because we were discussing this entry point right here. So that's why it started way back here. But does it make sense to everybody why he moved it when he adjusted it to get these wicks here that we were just discussing?
Yes.
Okay.
Yes.
All right. So let's run through exits really quick, which is video number 8, if anyone's taking notes. Okay, so basically, on the exits, if you are taking notes.
This was a good video.
It really is. That's what I was telling you guys earlier. If you don't do anything but watch video number 7 and video number 8 and video number 9 over and over and over again, if you got everything, it's just going to keep putting it all together. So this exit video, we're going to talk about why you should exit a trade. Price, you're going to use price channels and minor support and resistance. Now remember, trend lines and channels is support and resistance too, right?
Yeah.
You use that to exit the trades. You want to exit at the recent highs and the recent lows, and anytime you see what they call a double top, a triple top, or double tops and triple bottoms. And the whole reason for that, what that mean is, look at my cursor. A triple top mean that if this is resistance right here, right, it's going to make like an M formation and hit that 3 times. That's what a triple top. It'll be like 1, it'll hit it, and it might go up again, 2, that'll be 3. Okay. Triple bottom is the same thing except for it's on the bottom, which means it's gonna lie on the support, so it'll look more like W. Okay. And the double ones, meaning that it's only 2, they look more like a M or a W. Where the triples, it's 3 of them. It'll be 3 humps at the top, or 3 peaks at the top, or 3 peaks at the bottom. So the only reason why you want to exit a trade is if you have a technical analysis. Okay, so that means that you've used your trend lines, you've used your channels, price channels, market structure, support and resistance levels, your pivots, everything to determine a reason why you're going to get out of this trade. Now, everybody write these 3 things down. So it's 3 reasons why you would exit. If price breaches your trend line or your price channel. Exit if price breaches your trend line or your price channel. If it hits higher highs or lower lows and rejects. And then the double tops and triple tops, double bottoms and triple bottoms, they act as if, remember how we talked about hammer and nail? And how many times, you know, like support could get hit or resistance could get hit before it get weak and price is just gonna break through.
Yeah.
So
Okay.
on the double tops, you know, I'm saying double, so that means that it's been hit resistance level 2 times already, right? Same thing on the double bottoms. That means it hit support level at least 2 times. Triple tops and triple bottoms, same thing. That means it hit that resistance level 3 times.
Can you give me number 2 again?
I need 1 and 2.
Okay, 1 is exit if price breaches your trend lines and price channel. Gonna exit if price breaches. He didn't, I was looking, I thought maybe they would have like wrote all of this down. You know how they be having a little, but they didn't on this video. Exit if price breaches your trend line or price channel. That's number 1. Let me know when you guys are ready for number 2.
I'm ready.
Okay, I'm ready too.
Okay, if price hits the highs or the lows and rejects, that's the key word, and rejects. If price hits the highs or lows and rejects. Now, what that means, let's just visualize this. Let's say that you caught a sale at resistance level, right? Caught it at the top. You caught the move at the top. You in the sale. You're in profit, profit, profit. It gets all the way down to the low. And it doesn't bust through. It show rejection at that level. That means price getting ready to turn around. What you need to do?
Let it go.
Exit the trade. That's what that means. So you got to look for those rejection candles. Look for the exhaustion candlestick. Look for the engulfing. Remember, at the bottom of a downtrend, sometimes you will see a bullish engulfing, meaning we made it to the bottom of the trend line or the bottom of it hit support level, and it's a little bitty candle, or it might not even be a little bitty candle, but your next candle, as long as you didn't made it to some type of support, and your next candle is larger and it's a bullish green candle, that's a bullish engulfing. Remember? That's your key right there to get out. Same thing with the bullish engulfing. I'm sorry, the bearish engulfing. Let's say you're going in for a buy. You bought it at support. You buying it all the way up to resistance level. So you're going to take it all the way to R1 on your pivot. Right? Well, you don't know if it's going to go to R2, but when it hit that R1, now you got a candle that's twice the size of this last green candle that it printed, and it's red. What that mean?
Exit the trade.
Exit
Going
the
the other
trade.
way.
Why would you exit the trade? Because what?
Because price is now going to go. It's going to sell. It's going to go down.
Mm-hmm. Exactly.
Now I see why you're saying that it's good to actually have time to be able to watch the market, because just in case it does these little things, you can kind of catch it before you end up losing money.
Yeah. Yeah. So like I in the morning time when I'm trading, like I trade. I don't do anything else when I'm trading. If it's an emergency, you got to call me about 3-4 times before I pick up that phone. I'm concentrated on trading. I don't do anything. If I got other stuff going on, I won't even trade. You know, and I know how to set take profit and stop loss, and you know they say you know, just let the trade run. Well, I do, but if I can sit there and I see that market structure is broke, I'm not finna sit there and let it go to stop loss. I'm getting out. And so it just minimizes your loss if you can, you know, pay attention to it. However, you do want to become a trader that can set your stop loss and your take profit and be confident in your analysis and trust your own self and your analysis and just let your trade play out. However, like I said, if you sit there and you clearly see, you know, why would you sit there and just let it go? And you see that it broke structure. That's why they teach us these things. But everyone don't have time to sit there and watch like that. And so for those people that can't watch it like that, that's why they suggest that you take the trades on the higher time frame.
Makes sense.
Okay. All right. So now everybody know how to enter and exit a trade, right?
Somewhat.
Okay.
I know I can do all this stuff when you teaching me, Andrea. It's just when I get on my own, trying to put it all together.
Just
But no,
take it.
it's
Just take
coming.
everything and put it together. Make sure that you got the strategy overview from video number 6. The 4 things to do, which is the 1 hour time frame. That's where you're gonna mark your major support and resistance. Then you're gonna drop down to the 15-minute time frame, mark your trend lines and your channels. Then apply the pivot point standard indicator. Use price action to enter and exit the trade. That's it. Let me see if it's anything.
So I'm just going to go ahead and take this money and leave.
I don't have anything.
Like, let's say price is kind of over in here. It's not quite to my target, and it breaches this trend line. If this trend line breaches, that's a sign to me that we're probably not still going down. Okay.
Okay, so here he got in for a sale, right up here. You see how you got the trend line? We know this is bearish. Price is underneath it. He got the trend line drawn because he knows that if the trend line gets broken, price has reversed. Now, if we were trading from pivot to pivot, this would have been our TP, and it actually hit. And then somebody tell me what this candle right here is indicating.
Got that doji where prices getting ready to change.
Yep, that would have been your indicator right there. But this would have been your TP, and it would have hit. But just in case for some reason you didn't, or you set it down here or something, when you see that candle, it's time to get out. Make sense to everybody?
Yes.
Okay.
Okay, so that's just an example there of how we're going to be using these little price channels and trend lines to monitor our trades. So let me see if I can find a good example for you guys of where that would have come in handy. Okay, so look
Everybody
over
pay
here.
attention to this.
Price was flowing down nice and smooth, right? We have this trend line coming down here, and then price is kind of halfway down. So let's say maybe we were in a sell trade up here. It's a good sell trade, stop loss above this resistance, aiming for this pivotal down here. And then midway down, price breaches our channel, our trend line, right? So
Now, when he first entered this trade, if he was doing trading from pivot to pivot and he tried to take it down here, everybody see the importance of this trend line break. Because if you had this trend line drawn, you know, if you had drew it, well, you would have got in the trade up here. So it really wouldn't have been a trend line to draw yet. But as price was going down, okay, you would have been able to draw it. And even if you had drawn it here, when price would have broke here, you could have got out, right? Because if the trend line would have been coming this way. Well, let's say you didn't get out. And as you can see, as he moved the trend line, well, this is his original trend line, but once he drew the trend line, you see how price stayed under here, but then when it broke here, it clearly was going the other way. Everybody see that? Now he just drew it like this because remember this is a chart that's already been played out. He just going to a certain area showing us a specific. But if none of this had happened over here on the right hand side and he entered this trade up here, when price started going here, trust me, he would have drew a trend line that would have went like this. But he just come to this specific area and showed you and just drew it this way to show you that break. But I'm showing you the importance of trend line. Even though this trade ended up going, you know, playing out the right way here, it would have still been for a great trade. Even if you had an exit here, you still would have caught pips.
And honestly, that's what I saw.
Yeah,
That
you seen that. That's what yeah.
You know
But
what this is
but
telling
he
me?
just went to this area though, you know, just because they just be going to a certain section to show you something. That makes sense. What did you say, Rodney?
Yeah.
You know, I've watched a lot of these videos, and I even watched this video last night,
Mm-hmm.
and I mean earlier this morning,
Mm-hmm.
and you're showing it now, and a new aha just came. It's just basically saying to me, I really need to be a trend line drawing machine
Yes.
because you never know when that is going to break a different way. Even though we got
Yes.
all these pivot lines and even if even if our zones are set perfectly, you never
Mm-hmm.
know what the market's going to do, but that trend line
Yeah.
can help save you
Mm-hmm.
some loss in money and pips.
Yes. A lot. And you know, I've heard so many people say like they don't trade with trend lines. They hate trend lines. And I actually love them because like you said, it'll save you some money. It will save you some money because the trend line that I was saying that, you know, our imaginary drew out here for you guys, would have been like after we entered the trade and we seen price going here, that's when we would have drew it, you know, because you wouldn't have one to draw except from up here when you
Let
first
me go
got
ahead.
in, right? So when price broke my trend line, I would have got out. And even though it could have been a pullback, I look for me another entry. I would look for me another entry. So guess what? So let's say I had drew that trend line there, right? I called my pips. I wouldn't have lost a lot of them by getting out down here. But here was the key with this candle right here. Okay. So once price, if I was trading the same pair, once price had got back up here, that's when I'd have moved my trend line, right? I would have seen it coming. As price was going back up, I'd have been like, oh, let me move this trend line. You know, I'd have moved the trend line. And then once it hit the trend line, what's that, y'all?
Another.
Huh?
Talking about the engulfing bearish candle.
It's how about another entry?
Yep.
Another entry. Remember,
Yep.
this is resistance.
Secondary.
Yeah, it would have been a secondary trade because we're in the middle of the pivot, but it hit the resistance and it held. Look at where it hit. It hit even on this bullish candle, right? If the short hit on the red bearish candle, but then look how far price had dropped on the grid. We in there.
That's a lot of pips.
It's a lot of pips. And then even though it didn't go, guess what? We got that trend line. By now we done drew the trend line. And so even though none of this had happened, even if we had to just extended the trend line, we knew when to get out. Make sense?
Ah, I see what you're saying. You're saying that if
Absolutely.
you would have drew the trend line before and got out early,
Yes.
but was on top of your game, you could have got back in right there
Yes.
and then caught those pips that you would have
Without none
lost
of
because
this
you got out early.
drawdown right here. Without none of this draw.
Okay, I see why they call you coach.
Do that make sense to everybody?
Yes.
Yes, it does.
So as you in these trade, right? Let's say you place a trade, and as you adjusting your price channels and your trend lines, when it hit it again, guess what? Entry. That's another entry. Now, we know that the trend line has started from up here somewhere. We can't see because of this thing, but we know that we had to have a touch up there, right? Because we can't start it without a touch. So we know we had to have a touch up there. Looks like it could have been a touch here. Once we adjusted it, we seen that we had touch here. So when we drew it out and when the price broke, we knew that it was not bearish anymore. But you would have also knew if you were doing following your structure, right? Everybody see that? Did everybody see that?
Yes.
I'm sorry, I missed that last part of what you said.
That you would have knew from structure, because as it come down, look, it would have came up, right? Came down right here, came up, came down, up, down. Okay, so now we're here. So as price start going up here, once it crossed right here, and start to go up. Everybody see that?
Yes.
At that moment, we just got out of the trade.
Yes. So everybody see how we could have had two possible entries on this one pair within this one moment here.
So
Yeah.
I'm glad you said that. Go ahead, Stanley. I'm sorry.
No, I was just saying yes. I definitely see it.
Okay. Well, I'm glad you said that because like after today, I've been practicing my structure
Uh-huh.
And I was starting to think that I don't really need this structure. It's hard to learn anyway. I don't even need it.
No,
But
you need it.
then when you showed this, I can see where it could have saved me some pip loss, even though I had the trend line.
Yes.
So
Everything that you have learned in this 2-week course, you are going to need. Everything. The structure, the market structure, market reversals, the SNR, support and resistance, the trend lines, the channels, the pivot. You're going to need all of that.
Yep. It's like
So,
you want to build a house and you don't have the proper tools. You're not going to be effective in building that house. It's going to take you a lot longer.
exactly. So, but everything that you've learned, one tool or another can save you, from losing some money in these markets. So just apply everything that you learned. I'm going to say this again. I can't say this enough. Watch videos, pivot strategy number 7, pivot strategy number 8, several times. Okay. And then I want to go over one more thing, and I'm going to go ahead and wrap class up. Actually, we got 2 more things to go over. Did anybody have any questions about this particular video?
No.
Okay. Number 9, this is very, very important. This is your trading plan. You never want to sit down to trade without a trading plan, and you always want to check that news in the beginning. Okay? Now, we're going to watch the first couple of minutes of this video because it's very important. I'm going to stop at some areas. I got to make sure that y'all understand what's going on right here. Okay?
Trades late if you don't today. Okay, so just to keep in mind, this trend line has broken. Just get an idea of what price is doing. Now we've broken this. Okay, I can see that there are miscellaneous areas in here. Oh, and look at this zone right here. Look at this. I want to be very aware of this area coming through here. I don't want to test that area.
Do everybody understand why he drew this area right here? Everybody see how, look at the just this black line. You see how this is playing support here? You see where the wicks came down? Some of the wicks came down all the way into it, but then crossed over here. This one came all the way through, rejection on the underside. Here it crossed all the way over, rejection before it could cross through it, came back down. Everybody see why this is a major zone?
Yeah, and it serves as support and resistance.
Support and resistance on both sides.
Multiple touches.
Yes. But
Sound like we know something.
yes.
No, I definitely see what you're saying.
Okay.
With all these interactions in it. So I have that zone marked. I've got, this is broken. Just get an idea of what price is doing. We have a mean red candle through here. So that looks solid, took force to break through that. Now, is there anything else that I should be considering? Here, let's go to the 15-minute and just make sure that we're not missing anything. Okay, here's the 15. Okay, so on the 15, we have a trend line coming through here that's very clear. We have this trend line, we've broken this level. Now, if the pivots open up in, let's say, the next hour, I need to have a plan for what I want to do once they appear. So my plan is to sell. I want to sell anywhere under this area. I don't want to be buying under this area. I want to be selling under this area. Okay, so my trade plan for today is to come down here for the sell. That's ideally my plan. I don't want to buy anywhere. Okay, now price might give a sell before we get here, but I definitely don't want to buy underneath this level unless I have space to move. So it's very easy to acknowledge this whole area right here. This whole area is my sell area. Let's label this sell area. And I have an understanding of why I want to do that because I understand the technical tools I have used. So let's move this over here. This is my sell area. So if there are any pivot points within this area, I don't want to be buying off any of them. I want to be selling it. That's my plan. Now, if we get down here to this, our zone here, it's really mean across there that we looked at earlier. If we get down here within this area, I'll look for buys. This is going to be my buy area for the day. So let's label this buy area. So I know where I want to be selling from. I know where I want to be buying from. Somewhere within this general area down here is where I want to be buying from off pivots. I also have a few more areas that I want to include in my trade plan. If we break this support and it turns to resistance, I want to sell under here. So that's going to be another sell area of mine. Down here, it's another sell area. So if price broke through and came back up, I'd want to be selling. Okay? Just a basic understanding of these technical tools. Now, I have another sell area. I also have another buy area. Okay, and it's going to be on the other side of this trend line and above here. This is my buy area. That is ideally where I want to buy price today. Buy area. Got that labeled. If price breaks through this trend line resistance and this horizontal resistance and comes back to test it as support, I would like to buy. Okay? I have a basic understanding of where I want to buy and where I want to sell.
Does everyone understand this? Does it make sense that only these zones, the upper part is considered your support when price comes down to it, and that's where you want to buy. The underside is going to be your resistance area, and that's where you want to sell down. That makes sense to everybody?
Yes, it does.
Yes.
Easy way to remember it. Remember, when you're in the buy, price is going up. So on the upside, that's when you want to buy. Price goes down, so on the underside of it, you want to sell. Okay? Here. All right, hold on.
Let's say that pivots open up and they open up like this. Say there's one right here, one here, another one here, and let's say we've got one here and one out here.
Now, what he's saying is these are the support and resistance zones that you drew, right? That's what these gray lines are.
Mhm.
This is the pivot indicator. He's acting as if this is the pivot indicator line. So you then went to your 1 hour already, and you marked your support and resistance, which is here. Okay, and so let's just say that you've drawn your trend line on your 15-minute, and now you're applying the pivot point. So he just turned the pivot indicator on, and he acting as if these are the lines for the pivot indicator. So watch what happens.
Okay, so the pivots open up, and this is what we've got. Okay, this is an example. You need to understand how you want to trade each pivot. If price comes through this pivot and holds on this side of it, are you going to buy it in the face of all this resistance? No. You have all of this resistance standing in your way. You do not want to buy off this pivot into the face of that, trying to gun for the next pivot.
Does that make sense to everybody? If your pivot is right underneath an area of support and resistance that you drew, you definitely don't want to drive into it, right? Does that make sense to everybody?
Yes, it does.
Yes.
So just because you throw those pivot indicators on, that's why it's still important. Now, I stopped this part of the video because I'm pretty sure it's someone on here that's like, oh man, I can just throw the pivots on and trade pivot to pivot. No, you still need to mark your support and resistance, and this is why. If you didn't have this support and resistance marked up, let's just act like this, marked up chart, and we didn't have this, and when it would get here to this pivot, somebody might want to go ahead and place a buy. And we got this major zone. We know for a fact that this is a major zone because we see it and we drew it. So why would you want to go for a buy to catch pips going this way when you can't even, when you get ready to jump and you want to jump real high, you need some room to be able to jump right. How far you think you're going to jump from this line to here? So does that make sense to everyone of why when you put the pivot on there, if you have support or resistance right above it and you don't have any clearance for get some momentum, you don't enter that trade for a buy?
Yeah.
Yes.
Okay.
Doesn't make any sense. Now, if price comes up and holds at this pivot, just holds here, that'd be a fair sell. That's what you want to do. That is part of the plan. Sell it down to the next pivot. Okay? That is the only thing we should be doing right here in this area. Now, if price were to break above all of this and come back through, you want to be looking for buys in this area. Okay, this is your buy area. Now, what you don't want to do in this area is take a sell. We don't want to sell from this pivot right here. We only want to buy in this whole area. Okay, no selling at this pivot. Because if you sell it, price comes here and then launches off, you're going to be really upset. All right, let's look at the other pivots.
Did everybody see why this pivot would have been considered a buy? What side of your resistance is it on?
Mm-hmm.
What side of your support and resistance is it on?
Right. It's on the upside.
It's on the upside. So if price did come there, you could take a buy from that area.
And I have another question too.
Price comes down.
I'm sorry,
here.
what did you say?
And I had another question too.
Uh-huh.
It seems like what he was teaching us,
Mm-hmm.
it seems like we wouldn't take a buy under that top pivot either because it's so short.
Yes.
On that reason alone.
Yes. Now, if someone wasn't trading the pivot, like if you didn't use the pivot indicator and you just was marking up your charts, if price came, busted up and, came through and retested, then yes, someone would just take it. But if you marking them up and you got your support and your resistance and you can see that your pivot area is like super close, just like how it was right here with this sell, you wouldn't do it. You will wait for it to do the break and the retest of the pivot area. That way you don't have to play around in this foolishness right here. Make sense?
Yes. Now, a question for you, Coach Andrea. If that was at least 20 pips, because sometimes you can't tell until you measure it. If that's at least 20 pips, would you buy from that gray support to that pivot?
It depends on price action. It depends on price action. And then look at this. You know how I just explained to you that with this support and resistance line, we want to buy from the upside, sell from the underside. It's the same thing with these pivots. So price would have to beat and broke it and be on the upside of this pivot for me to take the buy. See what I'm saying? So it would have had to, if price was down here, it would have had to do a break and a retest, and then I'm in there. So you look at the pivots just like you look at the support and resistance. You're gonna buy from the pivot on the upside and sell from the pivot on the underside. But pay attention to your support and resistance levels. Does that make sense to everybody?
Yes.
Now, like I said, it depended on price action here. If I would have took it. Now, if it was just like, let's just say it came up, retested, and we had like a bullish engulfing, or something like that, then yeah, I would have took it. However, it's not far to go, so I probably wouldn't have took it up to the next level without watching it get past here first. That makes sense?
Yes, it does. Thank you.
Yes.
It does, especially since it's on the 15 timeline.
Right. It won't take long. So I mean, if you do something like that, then you need to watch. You need to watch it. And then, once we cross this pivot here and get to the upside of it, then you can go ahead and set your TP. Actually, this would be another entry. You guys need to be learning how to get them multiple entries. That would have been another entry. Do everybody see how that would have been another entry if we did take it from down here and we watched it and it ended up crossing over and it retests? What that mean?
Yeah, retest, sell. I mean, get out of the trade.
No, we were just talking about a buy. We were just talking about if we bought from down here. When he had asked me, would I have took like these little 20, 30 pips or whatever it might be right here.
So what you were saying, if it came down and retested, but as it was going down and retest, you would exit and like you said, if it goes back up in the bullish area, then that's another opportunity to buy.
Right. I would have bought another, I would have put in another order. I would have placed another trade for another buy. That makes sense to everybody.
Yeah, it does. Good stuff.
Yeah.
Yep.
All right. Let's see.
In our buy area and holds at this pivot, we want to buy back to this other pivot. Okay, because this is our
You
buy.
see why that's the buy? Why? Because it's on the upside of the pivot, right?
Yes.
Area. What we don't want to do is if price breaks through this pivot and holds right here right under it, in between this pivot and this major support, you don't want to be selling it. You're already at a support. What are you going to sell it to?
Did that make sense to everybody? Did you catch that? Listen to this.
Is if price breaks through this pivot and holds right here, right under it, in between this pivot and this major support, you don't want to be selling it. You're already at a support. What are you going to sell it to?
Everybody see why you would not be set? Why wouldn't we be selling from right here anyway on top of our resistance line, our support? And why wouldn't we be selling? What side are we on? So do everybody understand that even though this pivot is close to this support and resistance zone that you drew, even if it was to break it, you don't sell from here. This is the upside of the support and resistance. We can't sell until we get on this side of it, right?
Yes.
Which means that we need a what? What we need?
A break and retest.
A break and a retest. Who just said that?
Keisha.
Yes.
Oh, Keisha.
Yes. Do everybody get that?
Yes.
Yes. Get it. I definitely
Okay,
get it
so
now.
don't get tripped up on using those pivots and having your support and resistance zones on there. Think of them the same. You're going to buy from the upsides of both and sell from the underside of both. But you want to make sure when you got the pivots on, you got enough clearance to take off. So if you got your zone drawn up here and then you throw the pivots on, remember the pivots are pivotal institutional levels. This is the levels that the bank trade on. Okay, so you want to take your buys from the upper side of them and your sales from the underside. But you got to make sure you got the clearance to do it. And the reason why you wouldn't do it here, why wouldn't you do it here? Why wouldn't you sell it from here, from under this side of the pivot? What we got right here? That'll be an aggressive entry. You don't know what it's going to do. It could come down to here. It could turn around and go back the other way. And plus, we don't place no sales on the upper side of our support line. So even though it's the underside of the pivot, it's the upper side of our support line. Make sense?
Yes.
Mm-hmm.
Yes, it does.
So this right here is very important. I got this written in red on my notes for you guys. This is why you never buy or sell from a pivot over top of your own drawn significant support and resistance. I'm going to say that one more time. It is very important, and this is why you never buy or sell from a pivot area over a significant support and resistance. And when I say over, I don't mean like placed over top of it. I mean that instead of acknowledging your own support and resistance, you're just going to buy or sell off that pivot area. What I'm saying over is acknowledge it. Acknowledge that it's there. Acknowledge that, yes, this here is the pivot area, but this is my launch pad for my buys, right? So why would I place a sale here? On either side of this pivot, even if price had came down to here, right? Even if price came down to here, I'm not selling from there. This ain't my sale area, is it?
Nope.
No, that's about
Right, because sale area is on the underside of my structure zone. Even if you don't draw zones and you just draw a line, you know, on top of the line, that's where you buy or sell. I'm sorry, over top of the line is where you buy, and from the underside of the line is where you sell. So just pay attention to how close it is to your pivot areas. And so it's very important that you guys have a trading plan. Never trade without a trading plan, and never go against your trading plan. Let me see if they got any here. They just showing you different examples. Like, you see, this is a pivot, right? The dotted lines are the pivots. You see how here he's saying this is a sale area, but you clearly want to wait for the retest. This right here is explaining everything that I just said. Even though he drew this line from here, from this pivot, they did not enter this sale until here, when it retested this structure that was drawn. Why? Because you don't know if price gonna do this or if it's gonna do this and take off this away. Same thing here. You know, waited for the break and the retest of the underside to sell. Same thing here. Could have sold to here. If price had went through here, we would have waited. We wouldn't have got in for the buy here because we're so close to this resistance level. You could have got in for a buy right here, right? Let's say you just did get in for the buy right here, and it could have hit here and then went back down, because this is a major resistance level. You know it is. You drew it there. So that's why you want to wait for the break and the retest, get in for the buy, and ride it all the way up. Makes sense?
yes, it does.
Yep.
Okay. All right, good stuff. I think you guys got it. One more thing we're going to go over real quick, and then we're going to sum up class. And this is going to be really quick. Actually, this is all we're going to go over right here. Everybody write this down, what you see on the screen. This is your tips for success. Okay, they say your pip goal is anywhere from 50 to 100 pips a day. I'm going to say, as a beginner trader, your pip goal should be 20 pips. Call it 20 pips and dip. You want to snatch you up 20 pips and get out of there as a beginner trader. Now, as you progress and you get better, then you can raise your pip goal up to 50 to 100 pips a day. Okay. Now, let's say you are placing your trades. You know how you use your little long and short tool on Trading View, right? So as a beginner trader, I suggest trading pivot to pivot. And I also suggest, like, you know, pay attention, and if you can get 20 pips and get out, get 20 pips and get out, and then pay attention to everything to see how it's going, so that you can see the difference in, because I remember when I first started trading, this used to get me all the time, y'all. I would be in a trade and I would get up to like 20 pips, knowing that I was taught a 20 pip and dip strategy, and I should be getting up out of there, collect my coins for the day, and just be gone about my business. But the trade might still be going. It'll keep going. It'll keep going. It might hit 40 pips, and I'm like, oh man, I'm 40 pips up. Should I get out? You know, I'm doing all my little stuff. Well, actually, I wasn't even doing like what you guys are being taught to do, because remember, I learned on my own. Like, no one walked me through this. So I didn't understand half of this stuff. So I would be in, you know, I'm up about 40 pips. So I'm like, dang, I didn't even use like all the tools that I'm teaching you guys right now, because this stuff just started coming clear to me as I watched it. This is probably like my fifth or sixth time watching it. Okay. And next thing I know, I done went from 40 or 50 pips down to like 8. You know, when I could have just secured my 20 and been good as a beginner trader and start increasing my pip countage as I progressed. That makes sense to everybody?
Yeah.
Yes,
Oh
it
yeah,
does.
sounds familiar.
Yeah.
So as a new trader, I suggest doing that. You know, catch your 20 pips, 20, what they say, 20 pips a day, keep the bill collectors away. You know, it's not going to seem like it's a lot right now when you first start, because you're going to be doing it on like a 0.01 lot size. But just think, if you was using a standard lot, that would be even $20. You know, if you was doing $1 per pip, that would be like $20. If you was doing $2, I'm sorry, $10 a pip, that would be $200. You know, so it doesn't take a lot of pips to make a lot of money trading. Some of the traders that make a lot, that they don't even be catch. Some of them don't even get like a lot. They just have compounded their accounts or was blessed to start an account with, you know, a large sum of money and can put bigger lot sizes. So you don't need that many pips to get a significant amount of money. That makes sense.
Yes, it does.
Okay, so we know that you need to be persistent and consistency. This is basically like 80 to 90% psychology. It's all mental. It's dealing with every aspect of you and your life when you sit down in front of these markets. If something going on, like if my vibes are not right, I don't trade, because I'm not finna be playing with my money like that. Don't trade when you emotional. If you lose 1 or 2 trades, guess what? It's time to stop trading, because at that point you're doing what they call revenge trading. You chasing the trades, trying to get your money back, and I can guarantee you're gonna lose some more. So don't do that. You lose 2 trades in a row, it's time to take a break. I mean, take a break. Like, it's time to just walk away from the charts. You come back and try it again later. Another session, or maybe the next day. Okay, do not trade high impact news. I cannot stress to you enough how important this is. I remember people telling me this when I first started trading, and I check the news. I check the news every time. Sometimes, well, no, I take that back. Not sometimes. One time I decided to trade news. And guess what? I lost, and I lost big. And I know what I'm doing in these markets. But the news don't care who trading or what you know. It's going to do what it want to do because it impacts it. So remember, red folders, don't trade them, depending on what currency it is. And then another tip for success is use the community. You know, this is a business module that's been set up for all of us to work together. So are you guys inside of the community Telegram chat?
Yes.
Yes.
Connected with? So there, you know, start marking up your charts and, you know, posting them in there. If you got marked up a chart and, you know, you want to get some insight on it, you know, post it in the group. Reach out to some of the people. I hope everybody's been paying attention to some of the people that's been on these sessions with you, because you know that you all have completed this course together. So you might be able to ask somebody, you know, in a class that's been in the class with you something. Y'all might be able to start doing some markup sessions together, you know, because you all on the same level. You've been through the same material at the same time. It's a whole lot easier when you're doing this with someone that's on the same level with you. You're just not learning, so you can't teach this to somebody else yet. Not saying you're not going to be able to, but you can't do it now. I couldn't do it when I first started. It's taken me 6 times to go through this to be able to make it make sense to you. And I'm still learning. I'm still learning. Okay, so does anybody have any questions about anything that we went over tonight?
Andrea, I have a question when you said something about the community Telegram chat. I want to make sure, is that in Tradera itself, the Telegram chat, or what are we talking about?
Let me see. I'm gonna have to look for the name of it because I have 1,000,001.
I know it's so many of them. I'm like, eh.
Let me see. So we have the Tradera alerts, of course, but then there is the one, well, I guess I got a lot too looking at it. I see the Trade Era Elites Forex community.
Yes, the Trade Elites paid members group. Now that's the one where you gotta take the screenshot and drop it in there. But it's also another one. Hold on, I gotta find it.
Is it the GFXTC? I know that's the one that Donnie
Yes.
is in.
That's the
GFX.
GFXTC Tradera
Partners. Mm-hmm.
That's where they drop the live session link. And it's still another one. It's the Tradera one. I'm trying to find it right now. And I think it's like for the company.
Official Tradera News. Is that it?
There are trade alerts, not that one, or
no.
No, it's Tradera LLC official company Telegram.
Okay, thank you. Let me go.
Yes, that's that.
Because I see.
Do you have the link for that to drop in the chat, someone?
Okay, I just did that.
Okay.
Everyone check the chat.
Thank you.
Yes, thank you. Okay, here we go. Join group.
Okay, so you guys, if you take that link, and if you got your Telegram up, drop it in there.
Okay. Oh, okay. So they do live trading sessions in here too.
Mm-hmm.
Oh, thank you. I see that US 30. How did you pronounce what the US 30 is?
Indice.
Indice. Yes, thank you.
Okay, so tonight, you guys, you have the slice and dice strategies to watch. It is going to be about an hour and 20 minutes worth of videos. This is your last section of videos to watch in order to complete this 2-week syllabus. Everyone that's been showing up here for the past 2 weeks will graduate tomorrow. I want to, hold on one second, you guys. I want to end this recording real quick, okay?